Hello, everyone. Good morning, good afternoon, and good evening to you, depending on whichever part of the world you are tuning in from. I'm so excited to welcome you to yet another promising edition on the Forex Morning Mastery, as we are going to be taking another fresh new look into the financial market, especially as we are delving deep into the second half of the week. Now, where will price close for this week? This is the time this is the beginning of that phase to know where price action is likely going to be closing for this week. And please just stay tuned in so that you don't miss out on any of the valuable ideas we will be discussing on today, and of course see how we will strategically position ourselves ahead of today's trading session. Well, first of all, I would like to say here that I'm experiencing a little bit of flu at the moment, and at some point in time I will likely be doing some sniffing to manage my running nose. Please don't bear with me, as this might come up occasionally. So I'm so excited to be with you here this morning. We had very interesting situation go on during yesterday's trading session. It has been quite a very viable week for us all. The GBPUSD did very well. The USOILSPOT, in fact, unexpectedly hit my TP target. I didn't know that price will move that fast. We are going to be looking at what is really happening in the market, and except for the XAUUSD, where we have been witnessing some consolidation phase, which further emphasize the level of indecision in the market right now. So we are going to be looking at the fundamental factors that are affecting the sentiment, while we also look at things from a technical standpoint as well. And for those of you who are with me on both my TradingView and Telegram platform, you must have gotten an update into how we are going to be managing our positions. But if you haven't, don't worry, we are going to be talking about that in details in a moment. Now, for those of you who are joining us for the first time, you are highly welcome on board, and I'm very excited to have you around with us. Now, you might be wondering what this is all about, or what is it that we are doing here on the Forex Morning Mastery. Well, first of all, we are technical traders. We gather here every day as a community and engage in follow-ups and reviews of our current positions in preparation for both the London and the New York session. Now, this session usually kickstarts 8:05 a.m. UTC, 9:05 a.m. West African time, and I do recommend that you stay tuned in so you don't miss out on any of the valuable ideas we will be deliberating on today. Now, my aim is to equip you with the knowledge and skills necessary to make informed trading decisions independently. Now, the more time you spend with us, the better you will become at comprehending our analytical approach, utilizing the information gathered here to enhance your own trading decisions and strategies. So once again, you are highly welcome on board, and I encourage you to engage in the comment section. So with that being said, here we will be diving right into the business, and as usual, the first thing we usually do is to check on the economic calendar. We want to see the fundamental factors that will be affecting the market sentiment for today's trading session. And in fact, if we look at this, we really do not have any high impactful event. So what we are going to be doing is to I already checked this earlier. I don't know why this came up again. So what I did here was to include the medium impactful events so that we can at least have an insight into what is likely going to be driving the market sentiment today, as we all anticipate the major key event from the US tomorrow, which is the US non-farm payroll. Now, after including the medium impactful event, I was able to come up with a couple of events from the United States. Now, the first one here is coming up in about 4 hours from now, and that is the Challenger job cuts, which is usually released by Challenger, Gray, and Christmas. And for those of you who don't know, this is an incorporation, an outplacement. It's also considered to be an executive coaching firm based in Chicago. Now, this company specializes in providing career transition services, executive coaching, and other human resources consulting. So now they will be publishing in a report today, which is an indicator used by investors to determine the strength of the labor market in the United States. And usually a high reading is considered as negative, which in the long term could incite some bearish expectations on the US dollar, while a low reading is considered as positive for the labor sector. Now, if we look at the previous data for the month of October, you see here that it came in at 36,836,000, which is, for me, astronomically high. So we do not have any consensus that we can use to gauge what the expectations for the month of November is going to be like. But in this kind of situation, we usually have updates maybe a couple of hours into the event. So let's see how this is going to play out. We look forward to see what the actual data is going to be. Will it be beyond the previous data or below the previous data? And in fact, from what we saw from the ADP employment change yesterday, it really shows that the US labor sector is not really doing very well at this particular point in time. And the initial the Challenger job cuts will also give us an insight into how it is doing. Then later on today, we are looking at the initial jobless claims, which is usually released by the US Department of Labor, and it measures the number of people filing first-time claims for state unemployment insurance. Now, a larger than expected number indicates weakness also in the United States labor sector, reflects negatively, of course, on the US economy. And so we are going to be looking forward to what that data will be. So it's more of a labor sector data week that we have here, giving us an insight into the strength of the US economy as well. So what is the previous data here? We have a previous data of 218,000, and then we have the consensus projecting 222,000. So we look forward to see what the actual data will be. And from what consensus is saying here, it shows that the labor sector is not doing pretty well as well. So we wait to see what the actual data will be, and of course we do have a better timing to ensure that we mark out our levels appropriately so that we can anticipate the potential move prior and even during and after this economic event. So with the information we have gathered here today, we shall be diving right into the business. And before I do, I have a couple of comments here. So shout outs to Torres Master and Road to Freedom. Good morning to you guys, and I'm very excited and glad to have you around with us this morning. So with that being said, let's dive right into the business. And as usual, the first asset we will be looking at this morning is going to be the USOILSPOT, where we had a phenomenal week on this particular asset. And in fact, you can see how patience really pays off in this market. You'll see, remember at the beginning of the week, we can see that price action gave us a couple of losses at the beginning of the week. So let us refresh our memories as to what really happened at the beginning of the week. So here we are at the beginning, where we saw price action trading below the $75 area, which happens to be our key level identified on the higher time frame. Now, let me reiterate here, especially for those of us who are joining for the first time, please note that if you do want to have a background knowledge into how we got to this point, we did a top-down analysis during our Monday live session, so you can check that video to have a clue into how we were able to identify the key levels, the patterns, and the structures we said we will be using to guide our trading decisions for this week. And if in any way you've missed out on that one, you can check the links right in the description box of this current video to get a hint into that. So with that being said, let's dive back into the structure. So it was more of price action trading below our key level at the beginning of the week. And in fact, we saw that the momentum was more of bearish, and we had a range identified at the beginning of the week. We initially saw price ranging between the $74.75 level and the $73.50 area before it expanded into the $73 area, hereby giving us a wider range to work with for the first half of the week. And of course, you know how we use our ranges here in this community, especially when we identify them on the chart. We either wait for price action to break out of the resistant line of that range to give us an opportunity to buy, or price breaking down the support line of the range to give us an opportunity to sell. And for those of us who are with me during the session on Monday morning, we had a sell position triggered. Remember, we saw price break down the $73.50 level. We were taken out of that position in a loss, and then we saw again price act. We saw a big spike triggering our buy stop order just above the resistant line at the $74.75 level, triggered that buy position, and immediately price dropped again to the downside to take us out in a loss on that one. So as at the beginning of the week, we had two sell position, a buy position and a sell position taken out in a loss. So it wasn't a very good start, but thank goodness we were able to exercise patience and stay put with our strategy and analytical approach, and that resulted in some selling opportunities the following day, as we saw selling opportunities as price did break down the $73.50 level the second or third time to incite a selling opportunity for us. And since that moment, we have been selling the USOILSPOT. Then we added positions at the $73 area. We also added one more at the breakdown of the $72.35 level. Remember, this level was the lowest point before the beginning of this week, and I did mention on Monday that if price will break down the $72.35 level, this might be a very opportunity to join a significant move to the downside, because that level has not been broken for a very long time. And we saw exactly that happen this week. We saw price action continue to drop, and during the New York session yesterday, I did updated us all on both my TradingView and Telegram platform that we will be adding another position at the breakdown of the $71.50 level, giving us 4 positions into the New York session yesterday. So we saw price drop significantly well to the downside, and personally I left my TP target at the $69.50 level. If I had known that it was there, probably I would have extended it a little further, but thank goodness we saw price hit the TB target. And for those of us who capitalized on this opportunity, well done, and kudos to you for being on standby to capitalize on this move. Now, for those who still have a sell position running right now, I will encourage us all to either get out of this trade right now or move your stop losses accordingly and secure the current positions you have right now, as we begin to notice some interesting development go on behind the scenes. And for those of you who are with me on both my TradingView and Telegram platform, you must have gotten an hint into what is really going on behind the scenes at this point in time. Now, remember yesterday I did mention that everyone in this particular market will be looking forward to the ADP employment change data and the EIA crude oil stockpile report that was coming out from the United States. And lo and behold, we had a very interesting data released during yesterday's trading session. We of course know that the ADP did not do very well at all, which further gives concerns about the strength of the labor sector in the United States. Furthermore, we saw the US Energy Information Administration, that is the EIA, reported a significant rise in US gasoline stockpiles by 5.4 million barrels last week, which actually have surpassed the anticipated 1 million barrel. So this is a very, very significant figure here. Then we also saw the crude oil stockpile also fell from 4.6 million barrel for last week, 4.6 million barrel, exceeding the expected 1.4 million barrel. Now, the market focus may likely shift from the supply expectations here into demand, now that we saw the US stockpile drop by phenomenal 5.4 million barrels for the last week. Now, things might begin to transition into a reversal setup in line with this latest development. Now, something interesting has been going on in the market in the last 12 hours. As you will see, price action is currently ranging between the $70 area and the $69.30 level. As you will see here, throughout the Asian session, price action was unable to get out of the structure, which further emphasizes the level of indecision going on at this point in time. And in fact, this zone we've identified here is going to be what will be guiding our decisions for today. And of course, you know how we do it in this community, especially when we have a range like this. We want to exercise patience and wait for either price breaking out of the range to the upside to give us an opportunity to buy, or the breakdown of the range to give us an opportunity to sell. Now, if we look at this from a theoretical technical perspective, we can say this is transitioning into a potential downtrend continuation pattern after considering the impulsive bearish move that brought us into this point. And we saw here that as soon as price got into this area, price had remained within that area, transitioning into probably, we can call it a wedge or a bearish rectangle pattern, where price breaking down the previous low, which happens to be the lowest point for this week at the $69.30 level, to signal a downtrend continuation. However, if we look at what has been going on here since yesterday, you will see that as soon as price action tested the $69.30 level, we saw how it became difficult for sellers to continue to push price further to the downside. And in fact, we saw the second attempt here during the later part of the New York session, which failed. And during the Asian session, we had a huge gap. Price continued to find higher lows here, giving us signs that buyers are gradually gaining momentum behind the scenes. As you will see, price is gradually tilting to the upside. Now, with this situation, I'm of the opinion that we might likely be seeing a reversal setup gradually unfold on the chart as a result of this series of higher lows. Now, if we take it a step further to connect the series of higher lows here, I think we should be having something like this. We are going to be doing some readjustment to this when we bring back our candle charts. Hold on a second. So we have something like this within that range. So if I project this further to this point here, we should be having these trend lines here to guide our decisions for today's trading session. So what this simply means is that if price remains above these trend lines, we shall look out for buying opportunities at the breakout of the $70 level. Now, I already have a buy stop order triggered. I did share an update on both my TradingView and Telegram platform as regards to the setup, looking out for buying opportunities above the $70 area. So buy position triggered already, and ensure you have your stop losses in place. Anywhere below this trend line seems most appropriate. Between 45 to 55 pips is what we are looking at around this area, and let's see how far this bullish momentum will go. Now, as price continues to climb up, I want to emphasize that this is a counter trend opportunity. Remember, price action has been very bearish in the last couple of months, and if price begins a momentum here, it will definitely be considered as a counter trend opportunity. Now, if price continues to move, remember that during our live session yesterday, we did identify a couple of descending trend line, but this one right here is the most important one we are going to be using for today. Now, remember, this trend line here was broken during the earlier session for yesterday's trading session right there, and from a technical standpoint, whenever price action breaks down a key structure such as this, we do expect that at a point in time price may likely come back to retest the structure, then incite a downtrend continuation, or it might even break out, retest it to now incite an uptrend move. But in the meantime, we will exercise patience. Let's watch how the price is going to behave, and if price gets into that trend line, we should be looking at a minimum of 180 pips to about 200 pips to catch on this one. Now, if price gets into that area, depending on how market participants react to the structure, will now determine if we are going to be adding more buy positions to our existing trade, or probably getting ready to sell if we begin to see signs that buyers were unable to break out of that descending trend line. So pending the time that happens, we remain bullish as long as price remains above both the $70 level and the ascending trend lines we identified here. Now, in as much as we're looking out for buying opportunity, you know how we do it in this community. We always want to keep a balanced perspective to whatever decisions we make in the market. We can plan this and the market does the opposite. And if it does the opposite, are we going to just lose out on that opportunity? Or best way is to probably get ready to capitalize on that move when it happens. Now, if we are going to be selling the USOILSPOT today, that is, what conditions or parameters are we going to be seeing on this chart that will make us feel comfortable negating the idea of buying and adopting the selling potential in the market? Well, if we look at this range we've identified here between the $70 level and the $69.30 area, it will make quite a lot of sense to wait for price to break down the previous low at the $69.30 level to join a continued downtrend scenario here. However, I'm beginning to suspect that we can actually take advantage of a selling opportunity even before the support line of that range gets broken to the downside. Now, the question is, how do we do that? Now, since we have an ascending trend line, which we already marked out earlier, we have a couple of them right here. If price action can breach this ascending trend line, that is, break it to the downside, then we want to start contemplating selling. But remember that we are not going to be jumping into conclusions within the range, as the breakdown could still turn out to be a false breakdown. So we will need price action to break it down and then do some retest of structure to confirm that truly buyers are finding it difficult to maintain their momentum above the ascending trend line, and this would reflect on the chart as continued selling pressure. Then we can join the sell move, then have a sell stop order below the $69.30 level to now capitalize on the next momentum. So this is the only condition that will make me consider selling the USOILSPOT today, and if price continues to remain above the 70 and the ascending trend line, we shall remain very bullish in this particular market. So I will encourage us all to mark out this level, as our center of focus is basically between the $70 level and the $69.30 area, and of course mark out those trend lines, as this is a very, very simple setup that we are going to be using to guide our decisions for today. So let's see how the market will play out going forward, and trust me, I will be with you in the comment section of both my trading view and Telegram platforms to give you updates as at when due. So this is my simple perspective to the US Oil Spot for today. If you have any questions whatsoever, feel free to let me know in the comment section. So as usual, I will be taking the next 10 to 15 seconds off to see if there are any questions before we move on to the next financial asset on our watch list. And you can as well use that time to mark out these levels on your chart. So I see your comment there, Eric Mudavadi. Good morning to you. Glad to have you around. I'm doing very fine this morning. Thank you very much for checking in on me. I'm really very grateful. All right. So in the absence of no questions, I will just take this as a confirmation that we are good to go this morning. And in that regard, let's move on to the next asset. If you have questions, feel free to drop them. I will be checking the comment section from time to time. So the next asset on our watch list for today is the GBPUSD, and finally we have been taken out of all the sell positions we had since the beginning of this week. Remember that we have been selling this asset since the beginning of the week. Let's quickly run through what went on at the beginning of the week and what led to the decisions of selling this particular asset. Now, looking at the structure, we had a situation where our key level was situated at the 1.27100 level, and of course you know how we use our key levels in this community. As long as price action remains below the key level, we want to be looking out for patterns and structures that supports the idea of selling that particular asset. Now, in addition to this key level, we saw price action go through a very wide volatile price movement during the early hours of the week, giving us a huge range as we saw price confined within the 1.27250 level, which happens to be the highest point price action got to for this week. And then we had the support line of that range at the 1.26680 level, giving us a range to work with ahead of the new week. Now, we saw what was happening during the first 11 hours of the week as we saw price action staying more around the support line of that range, and then we had a couple, in fact multiple breakdown of the support line to give an idea that sellers might likely be dictating the pace for the first half of the week. So with our positions below the support line of that range at the 1.26680 level, we capitalized on the first sell position for the week, and we kept on adding positions. We had levels like the 1.26180 area. We also added one more level at the 1.26050, and of course the 1.2580, which was identified during our live session yesterday. So we had a minimum of 4 positions prior to today's trading session, and as at the time I was sharing an update on the GBPUSD, we had roughly about, how many pips was that did I share this morning? I think we had about over 250 pips in profit as at the time I shared an update this morning, and I did mention that we do want to be moving all stop losses accordingly, as the appearance of buy pressure here may likely be inciting some bullish expectation at this point. So right now we do not have any sell position or even buy position running at this point in time. Now, with no economic data from the United Kingdom docket for this week, it has really affected the traction of the pound sterling, as it is left at the mercy of the economic event from the United States. Now, on the US economic front, the ADP employment change for November grew by 103,000, though it was quite below expectation. It wasn't as what economists expected. So there was a little bit of negative variance in that regard. Then we also saw a softer JOLTS job openings for yesterday as well, which doesn't make the US labor sector a promising one at this point in time. And now that we are looking forward to both the what's the name again, the initial jobless claim and the challenger job cut, we are at a very critical juncture in the market, as majority in the market will want to get some confirmations into what is really going on in the labor sector. Now, yesterday, the Bank of England, Andrew Baylis, mentioned that the UK interest rate will need to remain at the current level for an extended period of time. So what that simply means is that, as against the previous week's hawkish statement, there might likely not be any further interest rate hike before the end of the year, which is not something promising for the pound sterling at this point in time. Now, the governor also went further to highlight the challenges in the overall risk environment due to China's economic difficulties, potential conflicts in the Middle East, and elevated public debt level. Now, these factors could probably exert pressure on the British pound sterling and act as a headwind for the GBP dollar for today. Now, if we look at things from a technical standpoint, how do we intend to understand how market participants will be anticipating the NFP data that is coming up tomorrow? Well, it is quite simple, as we have a simple structure here that we will be using to guide our trading decision. And in fact, we have been using it since the beginning of the week, and that is the descending trend line you will see here. Now, when we connected the series of lower highs, you will see that we have a descending trend line which has been supporting that bearish momentum since the beginning of the week. And you know how we use our descending trend lines in this community. As long as price action remains below the descending trend line, we want to feel comfortable in our sell position, and of course look out for more selling opportunities. Now, with the situation we have here, and after price action has tested the 1.255 level, which happens to be the lowest point price action has been for this week, we begin to notice the beginning, or the, let's say, the reemergence of buy pressure around this area. Now, the question is, will the presence of buyers around this area incite a reversal setup ahead of the NFP data, or this could probably be a false way of shaking out a lot of sellers from the market before price action continues to the downside? So what are we going to be looking out for today? Well, from a technical standpoint, the only reason that we are going to be buying the GBPUSD today is for price action to take out that descending trend line. So if I am going to give a visual representation of what I mean here, I want to see price break out the trend line and in fact do a retest of structure to confirm that truly we are going to the upside. And it appears that we already have a little bit of a breakout of the descending trend line here with an engulfing bullish candle, which is a positive signal that price action is likely going to be going to the upside. Now, with this information in mind and with the way things are going right now, I will just place a buy stop order just right above the 1.258 right now to capitalize on that uptrend continuation, since price has broken out of the structure and we might likely be seeing an attempt to do a retracement, maybe to retest structure in anticipation of an uptrend move. Now, in this case scenario, buying above the 1.258 area is going to welcome a wide stop loss range, and the reason why that is simply because of the NFP data coming up tomorrow, how we might likely be seeing some choppy situations emerge on this chart. So stop losses should be close to the support line of that range, about 25 to 30 pips stop loss here will be quite appropriate to manage this bullish expectation. So we have a buy stop order above the 1.25800 level to capitalize on this uptrend continuation. So let's have ourselves positions right above the 1.258 to capitalize on the uptrend move. However, in as much as we're looking out for buying opportunities, you know how we do it in this community. We try as much as possible to maintain a balanced perspective to the market. As we may say, price may go to the upside and it just goes the opposite way, and of course we do not want to miss out on that opportunity when it finally happens. And secondly, the fact that price action has been bearish since the beginning of the week, respecting that descending trend line, more or less gives us a sign that sellers may still have a say in this particular market. Now, if we do want to sell the GBPUSD today, what is it that we want to see on this chart that will make us feel comfortable selling this particular asset? Well, since we already have the lowest point for the week around the 1.25500 level, as you will see here, and in fact since the New York session yesterday, it is quite clear that price action has been within the range of the 1.25800 and the 1.25500 level. And of course, you know how we do it in this community. Whenever we have a range like this, we want to see price action either break out of the resistance line to give us an opportunity to buy, or the breakdown of the support line to give us an opportunity to sell. So if we are going to be selling the GBPUSD today, we want to see price action breakdown of the 1.2550 level, then we can join a bearish opportunities to the downside. And please remember, your stop loss needs to be put in place. You can place it anywhere above the descending trend line we marked out here, which will be dovetailing to between 25 to 35 pips stop loss depending on where your entry is. So this is my simple view on the GBPUSD for today. We have a simple zone that we will be focusing on today. That is the 1.25500 level, and of course the 1.25800 area, where depending on where the direction of the breakout will happen today will give us an insight into where price may likely close by the end of this week. If you have any questions whatsoever as regards to this current setup, feel free to let me know in the comment section. So I will be taking the next 10 to 15 seconds to see if there are any questions whatsoever, while you can also use that time to mark out these levels on your chart, as you will be needing them as a reference point to guide your independent trading decisions for today. All right. I see you, Ronalds. How are you doing, Ronalds? Good morning. Glad to have you around with us this morning. All right. So in the absence of no questions, I want to take this as a confirmation that we are good to go. And if you still have questions, I think there is a little bit of delay between my presentation here and the reception over there. But if you have any questions, feel free to let me know what you think. I can see a comment here from Rothu Freedom. Yes, exactly what I was saying with my GBPUSD. All right, that's great. You're beginning to get to understand the scope behind and on how to use price action to identify trading setup. That's a very, very good development there, and well done to you, Road to Freedom. So with that being said, let's move right into the last and final asset on our watch list for today's trading session. So the next asset on our watch list for today is my favorite asset, that is the XAUUSD, popularly known as the gold spot. And remember that we had a couple of buy positions triggered during our live session yesterday. For those of you who how it was during the XAUUSD live session, kudos to you guys, well done to you, and I do hope you took advantage of that buy position. So we maintained a bullish bias during our live session yesterday. We talked about buying above the $2,025 level, and that as long as price action remains above that structure, we shall remain very, very bullish, and that the only condition that will make us to sell is for price action to drop below the $2,020 level, which of course never happened, hereby negating the idea of even considering selling the XAUUSD. Now, with the situation we have here, it's quite interesting that price action has just broken out of the $2,030 level, making us have the second positions running at this point in time. And let's see if price is likely going to continue this momentum to the upside. And of course, in the last 24 hours, it was more of a consolidation phase as participants gradually sniff for clues into how to position themselves ahead of the NFP. And for me, from my own personal perspective, I'm of the opinion that major key players in the market will be getting some hints into what the data will be like tomorrow. And as a result of this, they will be gradually positioning themselves for the next move right now. And what we are going to be doing here as a technical trader is to ensure that we understand the psychology of price movement, and this will give us an hint into how we will be positioning ourselves for the next move. Now, there is something I would also like to talk about as regards to the fundamental factors in this market. Remember, yesterday we witnessed the weaker job opening data and a softer ADP report from the US, which indicates a slowdown in the US job market. And this has sparked concerns about the potential economic downturn in the world's leading economy, that is the US, and this is likely going to be bolstering the appeal for safe haven assets such as the gold. And given these factors, we will continue to maintain a bullish bias on this particular market structure unless something significant happens that states otherwise. Now, with the situation here, I also want to state here that there is also the prevailing sentiment in the market that the Fed rate, as the Federal Reserve, is about rounding off on their monetary tightening policies, hereby leading to a situation where we might likely begin to witness rate cuts by the first quarter of next year. So all of these factors here are supporting traction in favor of the gold asset. Now, let's look at things from a technical standpoint. What is really happening in this market, and how do we intend? First of all, we want to see what has been going on since the beginning of the week, especially for the sake of those who missed out on our earlier edition, so that they can also be on the same page with us. Then we're also going to be looking at what we will be looking out for from a technical standpoint to position ourselves for the next move in this market. So at the beginning of the week, remember that we had our key level marked out at the $2,078 area. And remember, you know how we use our key levels in this community. Whenever price action remains above the key level, we look out for structures and patterns that support the idea of buying. And when price drops below the key level, we look out for patterns and structures that supports the idea of selling. Now, with our key level identified at the 2078, now for those of you who are joining us for the first time and do not have any idea on how we identify this key level, please, I would encourage you to watch my weekend videos on the XAUUSD, where I did a top-down analysis on this asset. If you had missed out on those videos, you can check the description box of this current video you are watching. You will find the link that will direct you to that video. Take a moment to look at it and see how we were able to identify that level and how it had played a major role in determining our trading decisions for this week. Now, going back into structure, let me mark out the key level here, and you can see that price action had remained below the key level the major part of the week, giving us an opportunity to join that decline to the downside. So at the beginning of the week, it was more of an emphatic move to the upside as we saw price started the week around the $2,072 area, and we saw price skyrocket into a record high at the 2,143 level. And there are a lot of factors behind this volatile movement in price action. Well, prior to Monday's trading session, we had the news over the night about the attack on the US vessel in the Middle East by the Houthi. Is it the Houthi or the Houthi they call them? I'm not sure the right name that is, but they were attacked, and this probably skyrocketed the price of gold as majority dropped the US dollar. Then it took some time for market participants to digest the effect of that attack and how the US will respond to it, and that led to some choppy situation that brought price back to the downside, hereby normalizing this market structure. Now, with the situation we had here, we had a beautiful range that we were using to guide our decision at the beginning of the week, as we saw price confined within the 2078 and the 2143 area. And of course, you know how we use our key levels, our ranges in this community. When price action falls into a range like this, we either look for the breakout of the resistance line to give us an opportunity to buy, or the breakdown of the support line to give us an opportunity to sell. And prior to our live session on Monday, we saw our price action was more or less ranging just right around the 2090 and that area around our key level. And during the live session, we saw how price action broke down our key level at the $2,078 area with two engulfing bearish candle. And one of the things we agreed here on Monday was that if price will come back, retest the $2,072 area, we shall be joining a bearish momentum. And thank goodness this price came back into structure. We saw multiple attempts by the buyers to break out, but all of which failed at every point in time to incite a downtrend scenario. And in fact, as at the first half of the week, we were able to scoop in over 650 pips on multiple entries on these assets. Remember, we sold at the 2058 level right here. We also added one more at the 2035 area, maximizing the potential of that bearish move. And well done to everyone who took advantage of these opportunities. Now, during our live session yesterday, I did mention that I was beginning to notice the emergence of a reversal setup. Remember, which I said was looking more like a inverse head and shoulder pattern. So after taking this into consideration, I said we saw the left shoulder unfold, we saw the head of the pattern unfold right here, and that price may likely transition into the right shoulder to incite an uptrend move, which is something that looks like it's gradually transitioning into that particular structure. However, what we did here yesterday was to mark out some couple of structures here that we said we will be using to guide our trading decisions, and one of them is this descending trend line, which we said if price action can break out of this trend line, it will be a sign that we are likely going to be seeing a reversal setup here. Now, that was one of the scenarios we saw. Then secondly, we marked out a range. Let me scroll in so that we can see things clearly. So we marked out a range here where we saw price action ranging between the 2030 and of course the $2020 area. And within that range, we marked out the 2025 psychological level, and we said here that if price action breaks out of this 2025 level, we will be joining a buying opportunities to the upside. And in fact, we saw price action break out of the structure multiple times, came back to retest it multiple times. So if you had missed out on one opportunity, the market kept coming back into that structure, building some bullish traction accumulating buy positions to incite an uptrend scenario. And since then, we have been buying. And remember that we also said we will be adding more buy positions if price action breaks out of the $2,030 level, which actually has been broken out right now, and a further breakout of the $2,037.50 level will welcome more buy position, and a further breakout of the 2050 will be welcoming more buy positions in this particular market. So you can see it's quite a very interesting situation for us. And remember, yesterday we said here that if we are going to be selling, the only condition that will make us sell is for price to break down the $2,020 area, which we saw that at no point in time did price action ever came close to that area, hereby negating the idea of even considering selling at all. I got a lot of DMs from people during the XAUUSD live window yesterday asking that when should we start selling, and I did mention that every instruction for that position is scrolling at the left hand side of the screen during the XAUUSD live window. Now, one thing we would need to understand about the psychology of price movement is that we do not want to be triggered at every volatile move in price movement. If you say because you're seeing selling pressure and you want to join a bearish momentum, negating the idea or your strategy before that move happened, it's an act of indiscipline. So for us to be very consistent in our approach, we stay put with the structures we have mapped out. And during our live session yesterday, the structures we marked out says that we will remain bullish unless as long as price action remains above the $2,025 level, and that the only condition that will make us sell is for price to break down the $2,020 area. So that was our plan, and there was no reason even asking that should we start selling at all, since price never even came into that structure. So these are things that we want to be inculcating into our arsenals, the art of being disciplined and staying consistent with whatever approach and decisions you've made before the market even opens. So with this situation here, congratulations to everyone who are taking advantage of this buy opportunity, as we should be having a minimum of 2 positions running right now. The first one should be running with about 78 pips, while the second position should be running with about 25 pips in profit. So we have close to about 100 pips running at this point in time. Well done, kudos and congratulations to everyone who were able to hold on to this bullish bias. Now, since price has moved significantly well in our favor, it is high time we moved our stop losses and secure the current buy position, just in case sellers come in at any point in time. It's still not a valid area right now that's emphasized that buyers will be dictating the pace. Anything could still happen right here. The only condition that will make me feel very, very comfortable buying is if price action can take out the $2,037.50 level, which happens to be a selling niche since Tuesday's trading session. Now, let's move all stop losses anywhere above the first entry between the $2,028 area, and that first entry point seems most appropriate to lock in some profit. Personally, I'm not seeing this as profit yet, as price has really not moved very, very well. So let's see how the market will play out here. Move your stop losses accordingly, lock in this position, and let's see what will happen going forward. Now, for those of us who had missed out on this opportunity, well, price may still come back and retest that trend line that was broken yesterday to incite an uptrend move. It is still a possibility. So pending the time, our outlook here still remains bullish, even if sellers come in at any point in time and take us out of this buy position. As long as price remains above the descending trend line and the 2025 area, will still remain very, very bullish, and the condition to sell still remains below the $2,020 area. Please note this: we are not selling unless price action breaks down the $2,020 level. Now, another thing that could happen here too inside buying opportunities is a retracement back into the 2030. Now, if price comes into the $2,030 level and we begin to see buy pressure resume, that is, sellers were finding it difficult to drop or stay below the 2030, and we see some reversal pattern, just mark out your neckline. The breakout of the neckline will welcome buying opportunity. And remember, we have a buy stop order above the $2,037.50 level to capitalize on more buy positions on this one. So I remain bullish on the XAUUSD for today's trading session. Let's see how the market will play out in the next couple of hours. And trust me, I will be with you in the comment section of both my TradingView and Telegram platforms to give you updates as at when due. So these are my views on the XAUUSD for today. I do hope I made myself very, very clear. But if you have questions or you need some further clarifications, feel free to let me know in the comment section. And if you have found this content helpful, this session helpful and useful in making your own independent trading decisions for today's trading session, I will really appreciate your support by giving the video a thumbs up. Your likes are very valuable to me, and in fact it also helps the algorithm promote the video to a wider audience of traders who may find this content beneficial to them too. Thank you in advance for doing so, and for those of you who had clicked on the like button, thank you very much. I really appreciate your support in allowing this community to grow. And I dropped the link to the XAUUSD live window right in the comment section. It is pinned right at the top. If you want to be clicking on that link, click on the notify me button so you can get notified as soon as we come on live. Now, for those of you who don't know what the XAUUSD live window is all about, well, this is a platform that was born out of popular demand from these community members as we come together during the New York session to monitor real-time price action on the XAUUSD. So you do want to be part of that session to see how we do things real-time, positioning ourselves for the next move and managing our positions ahead of whatever will be happening in the market. So I look forward to seeing you right there in the comment section on that one. So it's on this note I want to wish us all the best of luck, or should I take some time out to wait for inquiries and questions before we round up for today's trading session? Okay, let me take some 5 seconds off and let's see if there are any questions then which will be rounding up for today. All right, so in the absence of no questions, I want to assume that we are all on the same page, and in that regard, let's just round off for today's trading session. It has been a wonderful day. I really love the energy in the house. I'm glad to have you around with us this morning. Thank you for your compliments. Road to Freedom, I'm very glad you found this session useful, and I hope that you exercise patience and wait for your structures to mature before you jump into any positions. Now, for those of you who are joining us for the first time, I do hope you are able to gain one or two things from what we discussed here today. And if you did, I look forward to seeing more of you in our subsequent edition. And trust me, the more time you spend with us in this community, the better you get to understand how the analytical approach works and eventually be able to use the information you have gathered here to make your own trading decisions. So far today, we were able to attend to 3 major assets, which is on our watch list for this week. And this includes the USOILSPOT, the GBPUSD, and of course the XAUUSD, all of which we were able to identify simple trading setups that we will be using to guide our decisions for today's trading session. So I hope that we exercise patience and wait for structures to mature before we jump into any positions. I just saw your comment right now, John Alabi. John Alabi, good morning to you. It's been a while since I saw you, or you've been around but stayed quiet behind the scenes. Glad to have you around with us today. Well, you said here that what caused a massive drop from 2,150 level profit taking, 2,150 level. Where is that? 2,150. Okay, 2,143. Price never got to 2,150 at all this week. So it's 2,143. That means you are probably joining us. You joined us very late. I did talk about the fundamental factors that were driving price movement around that area. So let me just quickly run through this. There are two major reasons why price action will fall from a major high. Now, let me talk about the popular one, which is more of psychological, and that is the fact that when price action gets to a new high, the emotions of fear becomes dominant in the market, as those who had bought that asset at a very cheap price will, out of fear, want to start closing in some of their positions to take some profit off the market. And now this usually reflects on the chart as price action either retracing or choppy situation, or even going into a consolidation phase, after which market participant gets used and acclimatized into that territory. Then they start building up momentum again to break out of that structure. So that is one of the most popular reasons why price dropped from the upside. Then secondly, we had a very important news at the beginning of the week when the US vessels and military vessels on the Red Sea was attacked by the Houthi terrorists from Iran, and this caused an imbalance in the market, as majority were not sure how the US was going to react to that incident. And as a result of that, we saw this price of gold skyrocket to the upside. And as soon as market participants begin to digest the implications of this incident, we begin to see some normalcy come in, resulting into that decline that we saw. So those are the two reasons that caused the situations we had at the beginning of the week. I hope I made myself clear. John Alabi, if you still have questions, drop them in the comment section and I will attend to it. So on this note, I will just have to call it a day here. It has been a wonderful moment with you guys, and I look forward to seeing you all in the comment section of both my TradingView and Telegram platform, and of course during the XAUUSD live window as we continue to monitor price action. And always remember that for every decision we make in the financial market, it is more or less an educated guess until price action hits your TP target. Now, in this regard, you want to be having a consistently risk management strategy that you want to be using to guide every positions you take in the financial market. So please make this in place whenever you make a decision in the market. You're very much welcome, John Alabi. So on this note, I wish you all the best of luck. Trade smart, trade consciously, and do have a wonderful day, everyone. Bye-bye.